Can personal guarantees be enforced after liquidation? So what is a personal guarantee? And that's where you have personally agreed to repay any liability to that creditor if the company cannot do so. So a typical example is a lender loans the company some money, and you as a director have said that if the company defaults on that loan, I will pay it personally, and that's a personal guarantee. So the first thing you need to do is check if you have given any personal guarantees. So you need to check the paperwork to see if one was given and read the terms and conditions of that personal guarantee. Now the trigger point, which means when you default on the liability, is not necessarily the company entering into liquidation. It could be before that. It could be when the company is insolvent. So insolvent means when you cannot pay your liabilities as and when they fall due. Or there's also balance sheet insolvent, and that's where your liabilities are greater than your assets, and management accounts are produced, and that might be a term of the personal guarantee that they're provided to the lender. Or it could be that they look at company's house and see the account information that you filed there. But insolvency can be a trigger point for the default on the loan, in which case they'll go after their personal guarantee. Or it could be as simple as the company's missed a payment. So you missed that one payment, that's classed as a default, and then under their terms of their personal guarantee they can come to you. And it might not just be for that one missed payment, it might be for the principal liability. Okay, so it's important to realise that there's actually a few trigger points or defaults that can cause the creditor to come to you personally, not just it entering into liquidation. Okay, so one of the questions I get asked is, I've got a personal guarantee, I've got some money coming in, should I hold off on the liquidation, get this money in, pay that personal guarantee, then put it into liquidation? That way I don't have to pay anything personally. And unfortunately you can't do that, because that's making a preference payment. Essentially you're using company money to pay that one creditor to protect yourself personally. You're preferring that creditor above the others, and you as a director, when the company is insolvent, have a duty to the creditors as a whole, not just to one, and that's what you're doing, and it can lead to personal ramifications to you, much more severe than just being called upon your personal guarantee. So I wouldn't recommend that you do that. And also I've seen directors ask, well, I don't want my personal guarantee called in, so I'm just going to hold off on liquidation. And again, I advise against this, because if your company is insolvent, it needs to enter into some sort of procedure, it needs to be dealt with, and liquidation, say, might be the most suitable option, and holding off, all that does is make the position worse, because interest or penalties could add on to that liability, which you're then responsible for. You could make the company's position worse. You could end up trading whilst insolvent, and the company could end up with serious legal action against it, like a winding up petition or bailiffs, etc. So holding off doesn't really work either. I think in these scenarios what you need to do is speak to someone like myself, a licensed insolvency practitioner, and just be open and transparent with them and say, look, this is the company's position, it's insolvent, but I've given a personal guarantee, and I'm worried about what's going to happen with that. And then essentially what I do is I'll tell you what needs to happen to the company. So say it needs to go into liquidation. I'll then explain what happens in relation to the personal guarantee. Now, as I've said, it could already start being enforced because you may have missed a payment, or the lender might know that the company's insolvent, or it's because it enters into liquidation as to what happens. But once it enters into liquidation, if it's not already being called upon, the creditor will know that the company is insolvent, entered into liquidation, and they may then may go to you for the personal guarantee. They won't necessarily wait, they don't have to wait to find out what the dividend prospects are in the liquidation, i.e. are they going to get some money. They don't have to, it depends what's in the terms of their PG, but even if they are going to get some money in the liquidation, it doesn't stop them from calling upon their PG. So that's when you need to look at your financial position personally and see whether or not you're in a position to repay that personal guarantee, or whether you need to negotiate with that creditor and explain to them what your personal situation is and come to an arrangement. But what I would suggest is to speak to someone like myself. As I said, be open, transparent, tell me what your worries are, what your financial position is personally, and then we can come up with a strategy for both the limited company and for you personally, so that you know what is going to happen. And in these scenarios, and I've seen it hundreds of times, putting your head in the sand doesn't help. We need to just have a strategy and then go forward. Okay, so I hope that's helped. If you've got any questions or you are worried about personal guarantees, just give me a call. Okay, thank you.